Well, we knew the day was coming, guys, where everybody says the Magnificent Seven is just completely overvalued, and it looks like we're here today, and that's exactly what Wall Street is saying, and that's exactly what they're pushing. But is there any truth to this narrative at all? Is there truth to it, or is it more Wall Street garbage? So let's take a look at exactly what they're saying, and more importantly, look at what the truth is in regards to what they're saying. Are they actually overvalued when we're looking at valuation? Or are they not overvalued in regards to valuation? That's exactly what we're going to uncover today. Just make sure you like the video if you like getting the truth without the hype. And also don't forget to check out the pinned comment down there. It's for my new channel where we talk about financial freedom and retiring early. Just check it out there, guys. Tons of great content. Make sure you're subscribed over there too. All right, so you guys know it's Wall Street here, and let's see what they got. Let's see if they stay on track or if they give us the usual BS as usual. But more importantly, I think the Magnificent Seven has broken out a little bit, and I think some are overvalued, some are not as overvalued as others are. So let's take a look at each one here and see what they have to say, and then we'll kind of discuss all of it.
The Magnificent Seven seeing nice gains following Q4 earnings, with the group now up about 9% for the year. My next guest says while the names are richly priced, only one is, quote, priced to the point of insanity. Let's bring in the Dean of Valuation, Aswath Damodaran, NYU's Stern School of Business. Professor, welcome back.
Thank you for having me.
The one that's priced to insanity, you suggest, is Nvidia, which is interesting because you own it along with all of the others, correct?
Yeah, you bought these stocks at the right time. They were amazing buys at some point in time. At today's prices, I mean, all of the stocks looked overpriced. But I think Nvidia stands out as particularly overpriced. I mean, just to get a collective sense of what these 7 companies account for in the S&P 500, these 7 stocks alone account for 70% of the overall market cap of the index. They account for 11% of the revenues, but they do account for 27% of the gross profit. So they're very profitable, very valuable companies.
Which, of course, just for you guys' knowledge, has absolutely zero to do with whether or not they're overvalued or not. How much they make up the indexes literally has zero to do with are they overvalued or are they undervalued. It just doesn't. And obviously, you're talking about right there, you know, that they only make up a small percentage of the revenue, but then a massive part of the profits. It's kind of telling you something right there. They're definitely, you know, crushing it from a profitability standpoint, which of course is huge for us as investors. But yeah, anytime I hear something like this to where, you know, somebody's going, oh, it makes up so much of the S&P 500, or it's responsible for so many of the gains in the indexes over the past 5 years, whatever the case is, totally irrelevant. It comes down to earnings, and that is determined, which of course those earnings determine the valuation of the stock. Anything else like that is just window dressing to, you know, perpetuate a narrative further, because they know most folks have no idea what valuation is, nor are they going to go look into it and see if this guy's actually telling the truth or not in the first place, or is this actually relevant or not in the first place.
And you can get pretty close to the current prices for the other companies. Nvidia, I can't even get close.
I'm surprised somewhat, if only because the valuation of Nvidia has come down as its earnings and guidance have gone up. So in some respects, what was perhaps insane has actually been justified in some respects.
No, in a sense, there is an adjustment process going on. I don't know where it'll end up. The truth is, when this process started, people assumed that NVIDIA's domination of AI, the chip part of the business, would continue in perpetuity. I think the other chip companies are waking up. Things are going to start to scale down. So I think in spite of the come down in price, I am more wary about NVIDIA than I was, simply because it's, I mean, last time I valued it, NVIDIA was at $400. Gives me some kind of perspective in terms of at 682. I mean, that's a stretch that's given the current earnings potential and cash flows. I just can't get that. Maybe I'm
right there. He's kind of giving away what he's doing. Last time he valued it was at 400, but has he used the updated numbers? When was that? You know, how long ago was that? You know, it's just kind of, I won't say comical, but, you know, obviously the guy's very smart. He's an NYU professor, you know, got more brains than I'm sure I could ever have in my lifetime. But nonetheless, that's not very smart to go, well, last time I valued it was at 400. Well, have you updated for the new numbers? And basically saying, hey, I think, you know, other folks are looking at it long term, and maybe their bull thesis is a little bit aggressive, and I'm not as aggressive with mine. I can see that. I definitely am not as aggressive on my assumptions with a lot of stocks moving forward as I am otherwise, but I don't base that. That has nothing to do with my valuation. I don't care what anybody else is thinking or what anybody else, when Tesla, when people are projecting it out to some crazy number that I don't agree with at all, It has no bearing on whether or not Tesla's overvalued right now right now today or not. And if I hadn't done a valuation on Tesla, after, let's just say it's been 2 earnings calls since I did my valuation on Tesla. And of course, when I did it 2 earnings calls ago, fair value was a much lower price than what it is right now. But I haven't updated my numbers based upon the new numbers that are out after earnings. That's also useless as well. So this is just kind of one of these deals to where I'm not disagreeing that the traders might push Nvidia down. Obviously, with earnings coming up, and this is recorded just prior to Nvidia's earnings there, might very well come down. Who knows at that stage? But in terms of valuation, right there, whenever we saw the chart they just pulled up there in terms of, the price to earnings ratio, wasn't terrible. Wasn't so astronomical insanity. It wasn't. I'm sorry. Tesla at 1,000 PE, that's insanity. Nvidia at 32 or whatever the heck the number was, that's not insanity. So, these right here are the kinds of things, and these are the kind of narratives that just, I don't know, maybe the guys are just too smart and they just talk themselves in circles and eventually just go, I don't know, just it went up real fast. So I'm just going to say it's overvalued. I don't know.
Missing some part of the picture. But to me, it doesn't make sense.
I mean, you're not alone. That's for certain. Look, price target went up to 800 yesterday from one firm. And today, on my earlier program, the halftime report, Josh Brown, who's been in Nvidia longer than anybody I know, sold 20% of it. I want you to listen to what he said, and let's react on the other side.
It just feels like there are people who are so bullish they've run out of superlatives and ways to describe Nvidia's market position and their technology dominance, and they're just like raising price targets. It's almost on a weekly basis. It's become breathless. I just felt like the chart went vertical and people have just like lost their minds. I'm as excited about generative AI as anyone else, I'm bullish. I'm just not that bullish where I think a stock should go up, where I think a stock should go up, 20% every month just because the alarm clock went off and the sun came up.
Pretty good, actually. I like that. And that does seem to be what happens in Wall Street. But notice he didn't cut his whole position. He trimmed 20%. And more importantly, he's a trader. Of course, he's going to take some profits. So then he can tell everybody, hey, I took some profits there when Nvidia, and I'm sure the technicals and other things told him it was a risk reward that was good for taking profits, quote unquote, on that. But if he truly felt it was just ridiculously overvalued, he would have sold the whole thing and waited for it to crumble back down. He's not. He's going to buy the dip a little bit, show that he took profits at this price. And, again, it's to pitch his fund and everything else like that. I understand, you got kind of understand the game that he's playing there. But nonetheless, hey, sometimes stocks go on these type runs. And he's right. Whenever people are just raising price targets for no reason to raise price targets, we know exactly what's going on there. Analysts just raise price targets, chasing momentum, doing what their bosses tell them to do. That's it. That's all that's going on there. So a lot of gamesmanship going on here with a guy like Josh Brown. And then, of course, this guy that's a professor, I don't know. I just think he's too smart for his own good. But let's see how he reacts to it.
No, I agree with him. I think AI has become this buzzword that people use to justify pretty much anything they want. I mean, I think collectively, AI is going to be a net negative for markets. It's going to be great positive for companies like Nvidia. But I think the laziness with which people attach premiums to companies just because they see the word AI, and you see that partially with Microsoft as well, is, I think, terrifying because at some point in time, reality is going to play out and it's not going to match those expectations.
That's right. Valuation is what matters. And I agree with him there. When companies that are AI related go to stupid valuations, go to a 1,000 PE, that's stupid just because they're AI. Or an unprofitable company that does something AI related and, doesn't have the revenue, doesn't have a path to profitability or anything else, they're seeing runs up during these time frames in stocks too. That's stupid. I would agree, but I always default back to valuation and go, hey, there are a lot of stocks that are overvalued in this AI hype. And if we get a gift there, if Nvidia has great earnings, but not stupid, ridiculous to where it justifies $1,000 price or whatever the case is, so Wall Street decides to beat it down, you're going to see a stupid low PE on Nvidia once again. And then it's going to, we saw this back when it started its run, basically a year ago or so, where it had a, it was valuation reset after valuation reset, but yet everybody was screaming overvalued at, $200, $300, $400. And yet the earnings continue to come in. Now, again, this would be completely different if it was trading at 150 PE or 1,000 PE like Tesla was. That right there is those scenarios to where I see exactly what he's talking about here. And you're seeing that with some other AI related companies, but you're not seeing it with Nvidia specifically. Now, again, I'm not saying Nvidia isn't going to get beat down after earnings. This just seems to be Wall Street is just waiting to take profits on the stock and looking for anything to take profits on the stock. But nonetheless, the bigger game here is if that happens and Nvidia actually, in terms of earnings and in terms of valuation, all of a sudden becomes a steal deal again, because all of a sudden Wall Street wants to get dumb and beat it down. Now the PE's, I don't know, 18, 20, whatever the number is, it ends up being out there. Could be a great opportunity there because it's a great company that's been performing great overall.
I'm wondering, when you look at some of these other companies within the so-called Mag 7, which seems to be maybe decreased by one or two of late, like a Microsoft, for example. So Microsoft's 10-year historical average is low 20s. Now it trades in the low 30s. But what was Microsoft doing over the last 10 years? Is it legitimate that its multiple now is in the low 30s by relative to how profound this relationship with OpenAI can really be?
I think it's a company that's closest to creating a subscription model around AI in which it can make money. I can't think of another company that's as close. So part of that increase, again, comes from the reality that AI is going to open up new businesses. But as a long-term owner of Microsoft, again, I'm looking at $404 or $400 per share, and I'm saying, I'm definitely happy that it's gone up to 400, but again, a lot has to go right for this price to be the right price. And pricing in that expectation sets you up for unpleasant surprises down the road.
Yep, and you can see it right there with the forward PE ratio of Microsoft of 38 there. So again, I think Microsoft's a great company, but I mean, it's had a great run, and yeah, a lot of it has been based upon what AI may or may not be able to do for it. You got to remember, Microsoft was going to kill Google last year, right? Or 2 years ago, I guess now. That was a narrative. They're there, they're going to kill it. So yeah, there's definitely some of that price into Microsoft there, but that's why you got to look at each one of these stocks individually. And for me, I'm looking at that. I don't think I could justify a forward PE for Microsoft unless there's something else out there that I don't know. Maybe they have a better growth rate expected than what we're actually showing right here. I'm not exactly sure, but I know that this happens from time to time. And we saw Apple, my favorite stock, run on an extremely high multiple for a really long time. And it's finally kind of reached its max on that. People are kind of like, oh, okay, we need to get back to fair value here on Apple. It happens during the stock market. Like Warren Buffett always says, stock market can stay irrational longer than you can stay solvent. And so that right there is kind of what you're seeing play out there. It, to me, again, looks like, geez, Microsoft in terms of forward PE is actually trading richer than Nvidia is, if I remember the number for Nvidia correctly. I don't know. You guys tell me in terms of growth rates, who has a better growth rate and who's cranking out the profits at a higher clip right now? Is it Nvidia or is it Microsoft?
I mean, the forward PE, we're looking 38. So I hear you. What about Apple? Let's leave it with Apple. What are your thoughts here?
I think there are two companies in this 7 that if you really wanted to buy these stocks, you've never owned them, you say, I've missed out. One would be Tesla, which will surprise you because I bought Tesla just a couple of weeks ago at 180. And the other would be Apple, which I think is adjusted down. It's still a cash machine, but Apple over the last 15 years has lived from iPhone upgrade to iPhone upgrade. It has a bad year, then a good year based on whether there's a big upgrade during the course of the year. So I think Apple will bounce back a little bit. It's a slow growth cash machine, and people have to be realistic about what they're getting. But I think that at 188, it's as good a buy as any of the other 7. So Apple and Tesla would be my 2 buys among the 7 if you really wanted to add 2 of these stocks to your portfolio.
All right. And so I know you guys probably know exactly what my thoughts are on Tesla. Obviously, when you have earnings continue to decline like Tesla's having right now, that brings the valuation down, which is why it's been very hard. And a lot of folks haven't jumped in on Tesla heavier than you would think at these prices because they just don't have the earnings to back it up right now. Of course, I think that will change next year, but we got to get through this year first. And that's the reality of this year right now with Tesla. And same thing with Apple. For me, they kind of showed the numbers there. It's a little bit on the rich side there, in terms of trading closer to a 28 forward PE versus where I think it more traditionally is in the 25. If you want to do 23 or so, okay, I could go with that too, depending upon where you want to pull the numbers from. But nonetheless, when I look at the Magnificent Seven, I don't see anything that's crazy overpriced in the Magnificent Seven right now. Now, you could say, hey, Amazon's always, their PE is ridiculous. Guess what? It's been ridiculous since the 20 plus years I've been investing. PE has been ridiculous every single year. even during the financial crisis, still ridiculous. I don't know. I know tons and tons of people that have just missed Amazon this entire time because they just can't ever seem to get around the fact that it just trades at a ridiculous multiple, mostly because Amazon does not bring profits forward and give it back to us as shareholders in their earnings. They actually reinvest back in the business. And of course, they kind of messed that up during kind of the shutdown time there. They overexpanded too far, and that really set them back a few years, which of course gave us massive opportunity to add to that stock at great prices there. So for me, I mean, when you're kind of looking at it, it's like, okay, I could make a case that Microsoft is the most overvalued of the group. I still think it's a great company, and I don't think it's going to crater down or anything else like that. I think the one that obviously has the biggest mark to crater down would be Nvidia, just because the ride has been so exponential and everybody has gotten behind it that you have so many traders with massive trades on with Nvidia. You could see that fall down, but then it's going to be a steal deal again at that stage. Obviously not steal deal it was whenever it fell all the way down to 100. It's not that kind of a steal deal, but it could be an opportunity there for somebody looking to do that. Of course, unless they blow it out of the water again, which everybody who's bet against Nvidia on earnings has lost. I mean, I don't know, what, 6, 7 earnings in a row now? Or maybe not that many, maybe 6, 5, 6. I don't know, good to go. You finally got one, but you lost the previous 5. So, just one of those things. That's why I don't trade. That's why trading is so freaking hard to do, because we're just doing what ifs and this and that and all that sort of stuff. And it's like, hey, I'm just going to look at valuation, buy stocks whenever they're at fair value, and move on with life. And over the course of, not this year, but over the course of 3 years, 5 years, 10 years from now, great companies are going to take care of you over that long run. And that's right there is what you need to keep in mind. And if you want to learn exactly how to do a valuation plan and get price targets so that way you're ready, regardless of what happens with the Magnificent Seven or any other stock you're looking at, make sure you check out the pinned comment down there for my group, where we have 5 courses you can take completely for free. You can use our stock analyzer tool for free. You can be a part of the best 6, 7, and 8 figure Discord out there. You can jump into my DMs. You can jump on our live Q&As, ask me anything you want. We got all sorts of other events going on in the group. We got a bunch of new stuff that's coming. It's about ready to release. Hopefully this weekend here, it's going to release, and so much more. Make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.